Hey, Laura Gallen here with Mountain Prairie Living, empowered by ERA Shields. And today we are with 719 Lending and KATRINA Stone. And I wanted to bring to you the perspective for the buyers in this transitioning market. So today we're going to talk about how things are changing with the interest rates, how it's affecting the lender side, so that you can be well prepared if you're a buyer in this market. It's really important to understand your market and to understand how shifts in the market affect you. So let's get to it. Hey, KATRINA Stone, I'm so glad you're here. Thank you for being with me today and answering a few questions. How are you doing today?
I'm good, thank you. How are you?
Good.
Yes, thank you so much.
Let me start with some questions. So with the interest rates rising, how have you been assisting buyers in this market with that transitioning market for preparing their pre-approval as well as helping them to shop in the right price point? Talk to me a little bit about that.
That's a great question. So I get a lot of questions about that because the rates have gone up from about a year ago now. And what I have done for them, for the current clients I work with, is either A, I'm very conservative with them and I try to basically raise the rate a little bit higher than the actual current rate as today's rate that I'm talking to them. Why would I do that? Because I know that the market right now is very volatile. And so I know as a lender that I've been seeing trends that it's a little bit higher than a year ago, 2 months ago, 3 weeks ago even,
Right.
a day ago.
Yep.
And so I am a little conservative with that, but I also want to help them with closing costs. That's a big thing right now.
Yeah.
Because, there's a lot of over asking prices, appraisal gaps, things like that. And so you have to think a little bit outside the box and to prepare the clients that this is not going to be your average traditional type of mortgage, meaning, like, for example, it might be a bank statement loan, or it might be an FHA loan, or it might be, what if we have to move money from a credit card in order to pay for your bills on a credit card, and then you have actual cash in the bank, just little things like that in order to help them use the money that they have.
So a good lender should always be looking at your scenario and picking the loan product that works well for you. And that's what she's speaking to, so that's really, really important. Let's talk about rate locks, because in today's market, you're shopping and you're not sure. Is there a way, do you have to wait to be under contract to lock a rate, or can you lock a rate ahead of time and then shop in this market?
That's a great question. So you can actually do a lock and shop, and you have an option to do a 60-day, 90-day, 180-day, and it all depends on the lender, and it all depends on your loan to value and your debt to income and FICO scores. So it truly is, in our industry, it's not black and white. It is never black and white.
No, real estate isn't.
So the answer is, and I hate to say it, it depends. It really depends on every little scenario. Every person is different, and like I say, I'm like a mortgage doctor, so allow me to write your prescription and allow me to help you work through it, because every single client is different. So if you go to your neighbor and say, and your neighbor closed on their house, oh, I got the greatest interest rate. Well, it all depends. So
I think that's important too, to understand real estate is always going to change. Every business in life always is going to change, and we're currently going through a big transition. Hence why I want to bring you as much good information as possible if you are out there house shopping right now. So what's the last 2 weeks? Talk to me about the contracts that you've seen. Are they at asking? Are they still over asking? Are any below asking? Are you seeing a mix of all of that through this transitional period?
So below asking, I have not. No.
Okay, so we're still above asking.
Yes, we're still above asking, and I have seen but very, very little amount at asking. So I would say it's more above asking price, but it seems to be calming down just a little bit.
Okay. Are the appraisals coming through well? Are we having any major issues with any appraisals not making the mark, or are we pretty comfortable in this transitional period with appraisals?
I have not seen anything come back to where it didn't appraise as the purchase price, which is very nice, and our appraisals have been back within 1 to 2 days, business days. We usually, as 719 Lending, myself, I order rush appraisals, just because that way, if it comes back to where, let's say, you have a VA loan or an FHA loan, and it comes back to where you have to do repairs, we have time at that point to do those repairs. So, and then let's just say if the appraisal does come back lower, we have time to fight it and go forward with it.
So I talked about the May stats in the video I did last week. So what you'll know is currently we're still at 102.7% above asking price on average in the El Paso County market. And for the condo townhouse market, it's 103.8% above ask. But I believe that in the June stats and the July stats coming, we're probably going to see more of at asking price, or maybe even a little below that as an average in our market. So it's good to know that things are still up there if you're about to list your home, or if you're out there buying, keep that in mind, that the cream puffs are going to probably still have multiple offers, 2 to 5, but you still may be competing if it's a cream puff home. So important to understand as a buyer. So tell me what your perspective is in this transitioning market. What do you think is ahead? How are you going to help your buyers make that transitional period with their loans, keeping them in a great point? Because I think what most buyers would be afraid of is getting a loan payment that's too high for their budget. So how are you going to help them manage that?
So what I usually do is, unfortunately, there's just so much information, and it's really hard to not overwhelm somebody, especially if you're a first-time home buyer, because there truly is a lot of information. And as a first-time home buyer myself many years ago, I was overwhelmed myself. And so what I like to do is I like to try to take it one step at a time, because if you overload that information with somebody, it just goes over their head. So what I do to prepare my clients is first I start off with the very beginning of the pre-qual, right? Talk about like the numbers, talk about first things first. What is your goal of a monthly goal payment? Grand total monthly goal payment. And then I go forward and I don't even talk about what they can truly qualify for. I don't.
Right.
Unless they really ask me, I then say, okay, fine. But keep in mind, remember, you said your monthly goal is $1,500, whatever it may be. This is your actual amount that you need to stick with, your purchase amount. And so I try to guide them and walk them through that. And then, of course, I go into, how much money do you need to have for closing costs or for appraisal gaps or for anything along those lines, appraisal, inspection, things along those lines, and how much money do you need to have. And so I essentially coach them on how to move money from one place to another. I actually have clients right now is about 1 to 2 months out, and they're VA, and I just said, look guys, you can do this. If you really want to buy a home, if you want to live in this home, you can do this. You just have to figure out how to do it. Here are options, and I give them options, A, B, C, D. And here's your options. And so you tell me what you need from me, but here are your options. And so make it very clear.
It's really important as a buyer in any market, even if you're not a first-time home buyer. We are your resources. We're going to talk to you about the cost of getting into a home. I don't necessarily go into the details that she just did, but I do speak to you about what you should have in the bank, what it may cost for a certain price point. But we are your resource. So
That's right.
Ask us. And as she just said, she's working with someone 1 to 2 months out. Don't hesitate to contact a lender 6 months, maybe even a year out, just to see where you're at. What's your credit look like? We are here to help you. We want you to be in your home just as much as you do. So never be afraid to ask questions. Don't ever think it's too soon to talk to a lender or a realtor. We are happy to help you any way we can. So tell me a little bit about what you would suggest in the next 1 to 2 months. What do you think a buyer should be doing in 1 to 2 months? What should they be preparing for? But also, what do you see coming in the market in the next 1 to 2 months? I know we talked about, or I've heard, that the interest rates will probably take another increase around July or so, and potentially in the fall of this year, maybe even more. But what do you think that a buyer coming into the market in the next 1 to 2 months should be doing or thinking about?
What I would say the biggest advice that I can say is just save money, and how to save money, because there's not a lot of seller concessions these days, and so it's possible you can.
As the market's shifting.
Yes, you could, but just try to save as much money as you can, because we are in inflation, and so it's nice to have a little bit of a lump sum cash. And like I said, you can move money and you can get a little creative, and I can help you with that creativity. So don't be afraid, like, oh, there's no way I can afford it. Trust me, you can. I have found thousands of dollars with people who are like, there's no way I have this money. You really can. And so I would say that. And I would also say that don't worry that our market is actually shifting. Like our lenders are creating a lot of different loan programs. So I'm a loan originator, but I'm a broker. I have so much access to a ton of different programs out there. I mean, just non-QM, FHA, VA. And so I did hear from the pipeline, or the big people, right, up in the government realm of the industry, and they're talking about FHA is actually lowering their MIP. Why are they lowering that? MIP is a mortgage insurance premium, and what that is all about, what that means to you, is a simple fact: if they're going to lower that amount, that means that you can lower your monthly payment. They're trying to average it out to where the values are going up, rates are going up, so they're going to lower the amount of fees. It's just an insurance that you have to pay to FHA. It's a government loan, and they're still going to lower that. Not sure when or if that's going to happen, but that's the talk currently. And so with this current market trend, they are also talking about in the fall time, we might go into a recession. And anytime a recession happens, if you see the history of our USA history in those recessions, is the rates usually drop. And so we could see some spikes in the summertime, and then once the fall hits, we might go into a recession. If that does, normally, with history speaks, that interest rates will go down.
So when she spoke about the MIP,
Yeah.
it relates to your debt to income ratio, and your debt to income ratio is one of the qualifying factors that they use to see how much you qualify for. So having that shift and adjustment potentially in the future is a good thing for you, if you need to go FHA to get into a home. So that's a positive. But the reality is, in this market, things are going to be changing. It's going to be shifting back to what we would consider normal. So what is normal? In a normal market, a home will sit on the market between 1, 2, 3, or 4 weeks. They will be a larger amount of inventory as it's slowly creeping up. We know it's creeping up. It's still a seller's market, so don't get that wrong. Check out my video from last week. But it's really important to understand that real estate will change. It should be a long-term investment for you, not a short-term investment. So if this is your opportunity to get into a home for the first time, or back into a home because you had a financial situation that took you out of your home in the past, then remember, this is long-term, so you're going to ride it out. So this transitional period that we're in right now, it's just transition, but it's not abnormal to get into 5 to 6% interest rates, a little bit longer on the market, a little bit more inventory. That is a normal and a healthy market. In the El Paso County region, the average appreciation rate over the last 20 years is 5.5%. What we just experienced over the last 2.5 years is abnormal and not healthy. So we are shifting into a normal and healthy market. So that's really important to understand. As a buyer, this shift is going to be somewhat in your favor. So I'm really excited to bring this information to you from KATRINA Stone, and she is available. As we said earlier, resources, we're here for you. I am so glad you hung out and listened to our video today. And if you have any additional questions, I will link KATRINA's information and mine below in my description box. And I'm so glad you're here. Subscribe to the channel for more good information to keep you on top of the market, and make sure you're fully prepared as you head out there. Thanks so much for watching, and have a great day.